starting the class. So good evening once again, welcome back. And today we shall touch an interesting topic, which I'm sure touches everybody who has been trying to do some trading. I realize there are many people who are in the group but either got stuck at some point, or those who are already doing well are also still struggling with the same problem, how to be consistent. So, how does a trader become consistent? Okay? We can talk about so many things, but we will focus on I call them the fundamentals. Once you take care of, you will see some kind of consistency coming in. Okay, and then the rest are what I call details. Okay, you'll notice that the more you trade, the more you learn that there's some things that are what we call details. All right. So, what shall we be discussing in this topic? Okay, we shall be discussing what it takes to be consistent. And in this case, there are three major things that we must do to be consistent. One is to be able to have what we call consistent habits. Okay, you might argue that that is very basic. Yes, it is basic, fundamental, but it is that consistency in your life, consistent habits that create a consistent, profitable trader. All right. So, what are these consistent habits? Well, I can go on and on and on, but you know, every day when you wake up, I'm assuming you brush your teeth. I'm assuming you make your bed. Okay. Those are some of the basic things that are consistent in our lives as human beings. But for you to be a consistent trader, there's some things you must do daily. One is you must daily, okay, uh, enter the market about the same time. All right. Once you know you're either what do you call it, London breakout trader, or soon thereafter, okay, as a scalper, you must by now know the best time to enter. Again, for scalping, for those who want quick scalps before the opening of the market, yes, between 7 and about 8:30, 9 o'clock, there's a bit of volatility, but usually it's very erratic. Might go up, or two or three candles, then come back, three or two or one, go up. So it's very inconsistent, which makes it very difficult to trade. So that is not a good time to enter. Yet you notice that usually after the breakout, um, the markets tend to rally fast in a particular direction, and then they change and so on. So the point is, you have to decide what time you want to be entering the market, and then you make it regular. So every day at about the same time you enter the market, and you hope and plan to be there for what, 45 minutes, an hour, maximum two. Okay, when you start going beyond 3 hours and 4 hours, then you are over trading. But again, as a scalper, you need to have a regular time. So you need to be consistent, number one, in your entry in the market. Number two, you need to be consistent daily in this application of strategy that you're using. So for now, I have taught you essentially just one way of doing it. It's not the only way. If you find another way that is working, then and you want to be consistent, then use that strategy daily. Daily. What I've shared with you right now is basically from a we'll call it what, from a global point of view, a strategy that works very well with scalping. But the details, how you implement that strategy, will depend a lot on each of you. Okay, there are many of you who will wait until they see the turning has happened, then they start trading. There are those who will not wait for the turn. Once they know that the market is okay, the general trend is down, but it seems to be going up, they start taking the sells right away. So the specifics don't matter. The general strategy matters more, and it has to be on a daily basis. So those are two very important things: your entry time and your strategy. All right. The second point, that was all under consistency. You have to have consistency in what you do. If it's 2 pips, then let it be 2 pips throughout your trading session. If it's 3 pips, let it be 3 pips. But when you start changing your pip targets in between, it messes up your game. It confuses your mind. Because in your mind, you set yourself to be going for maybe 3 pips or 2 pips or even 4 pips. Then suddenly, somewhere along the line, you start targeting smaller pips. That inconsistency is not good. It's not good for you who tries to become a consistent trader. So pick a pip target and let it be that pip target. Okay. Point number 2, okay, which is where we shall move a little bit. It's called evaluating your trades. So when you take your trades during the day, and I think I've always mentioned to you guys, you try and space them out. Okay, by that, what do I mean? Let me see if I can draw something here. Okay, so if this is the chart, let's say we're doing sells. Okay, so the market is coming from down, retraces, down, retraces, down. Okay, so assuming here we are doing sells. Okay, let's see, but down here, then retraces, and then maybe here it starts, doing ups now. So you'll find that this maybe was your last high, and this may be your last low. Okay. So what you need to do is, what did I do here? 1 second. Oops, sorry. So sorry, I meant first to explain to you what this table before it came up, but it came in anyway. So at the end of the day, you need to go back and evaluate your trades. In evaluating your trades, you categorize them into 4 parts. The first 2 are your good wins, and we call them good losses. All right. Then the second category is the bad win and the bad loss. So what do we mean by that? Good wins are trades you planned on winning, and yes, you actually won them. All right. A good loss is again a trade you planned on winning, but you lost it. So that is fine. It's called a good loss. At the same time, there's what we call bad win, where a bad win is you had not planned on actually winning that trade, but somehow you won it. Maybe you are lucky and you won it because you can see clearly the market was going down, but you went buy, and somehow the market turns and it was, it took profit. All right. Sorry, that's a bad win. Now, bad loss is the opposite of the bad win. Bad loss is, yes, it was not planned, and nevertheless, the market still went against your no planning, lack of planning. Now, in each of these categories, you need to take a look at the trades that you've taken and put them under those categories. What would happen is on CTrader, if you click on deal map, it will show you the trades you've gone through. So what I wanted to share when I was drawing the map was to share with you the idea that actually you can space your trades. Oops. You can space your trades and use them for analysis. So whether it's a buy or sell, okay. So if these were sells, okay, and that was the main turning point, maybe the market was coming up, okay. So this could be a first setup ending maybe somewhere there, okay. So first setup. Then somewhere along the line, you consolidate a little bit and then it continued down. So then this could be your second group of setups, okay. And then maybe at the bottom of that price, okay, could be your third setup. Now these ones you will notice as you do your back testing, okay. So if this, this was the top and this is the low, sometimes the market gives you like 3 or 4 opportunities to do scalping. You can have a first setup, second setup, third setup. To me, consistency means the pip target from this, whether the first setup, second setup, or third setup, should be the same. That's number one. Number two, your entries should almost be the same. All right? Which means, like here, you are taking the entries when the market was going up. When the market was going up here, you started doing your sells, okay? And you did your sells for a while. Sorry, oops. Okay, and then when the market was retracing, it took profit. The same thing down. As it goes down, okay, sorry, as the market was going down, it was taking your profit. So my charts are not very good here, but you get the point. So what I'm saying is all the trades you take in that first region, call it your first setup, okay? And then all the trades you take on the second region there, call it like your second setup, which means if you had to look at the number of trades, if you had to lose these ones, for example, in your first setup, the trades didn't even go down. Instead, they started going up. So you know that the problem was actually along the first setup. Okay. Maybe on your second setup, the market went up, but now it started going down. So you'll be taking a series of trades there. That becomes your second setup. Okay. So you talk about the second setup if the trades were win or loss. And then the third setup. So when you break down your trades like that, it's easier for you to go back and do back testing to find out where could I have gone wrong. Okay, which particular trades were a problem. And you'll find that often, especially when the market goes against you, you'll find that maybe the first part you were okay. You thought it was just going down. And then suddenly the market has started going up. It didn't reverse the way you're thinking. So then it goes up. But instead of buying, now you're doing your sellings. And that selling might be okay as long as the market still comes back down. But if it doesn't come back down, then you'll start accruing very huge losses because you are still taking sales when the market is going up. Okay. If it comes down, then that's fine. You'll actually have made quite some profit. But if it continues up, then in your analysis, you look at these trades. That's setup. Okay, in your trade analysis. So your trade analysis means on your wins, okay, there's what we call a good win and a bad win. On your losses, there's a good loss and there's a bad loss. A good win is a win that actually you planned and you got it. A good loss is, yes, you planned on winning, but then you lost it. So that's fine. A bad win is you had not planned, but you lost it anyway. Okay. And a bad loss is you had not planned. Oh, no, a bad win is you had not planned, but you won it. And a bad loss is you had not planned and you lost it. If you take note of those trades, okay, and then now later you do your back testing after you're out of the market, you try and ask yourself what could have gone wrong. So you go back and do the actual analysis. Let me give you an example here. So I will go to, okay. All right, I will take one, for example, here. Okay, so this is just an example of a market. And if you right click on this and you do view options, there's what we call deal map. A deal map tells you the trades you took. Okay, so obviously I didn't take some trades for a while, but these are some trades I took. I took some sales and I took them at this point here. Okay, and they were like a very good sale. So I took them from there and then they came down all the way to here. And that's where I took profit. Okay, I think I must have been testing something there. So from there to there, that's about 35 pips. Yep, 35 pips. So when you're doing your analysis, you actually go back and you click on the deal map and you look at your trades and ask yourself, was this planned? Was it a good win? Yes, it was a good win. Had I planned it? Yes. If it was a loss, then maybe this here, maybe I would have done like a sell. I mean, like a buy. But instead of actually going on the buy, that actually I would have been losing up to down here. All right. So what you have to be doing is you have to go back to your trades and look at them. Click on the deal map and see. Let me see. I don't know how far back. I haven't traded this for a while. But anyway, you get the point. It will show you. It will show you the specific trades you have taken. All right. It will show you. So yours is to analyze those trades and you know if you had planned them or not, if they are winning trades or losing trades. All right. if I was to do scalping here, then assuming that this is the only thing we had there, okay? I hope you can see the right-hand corner. Then I would break this into chunks. Okay, let's see, let's use that one. Okay, so here, this market is going up, and yes, maybe I would start doing some sales, but when I look at this, this is the high, or the last high, okay, and this is the last low. So if you look at this body here, the market could be divided into about 2 or 3 portions, okay? So that now, when you start doing your scalping, you look at this as your first portion, this is your second one, and this is your third one. So if the market will continue beyond here, you want to do your sales, you know, all the way until that point. All right. So what would happen is if you have let's say a margin that can allow you 100 trades, okay, or 120, you take the average 30% of it and you consume the 30 in that first setup. Okay, you take 30 trades there. All right. If it goes, like the way you're planning, then you continue another 30 trades there. Yeah. What would happen is the mistake sometimes we make is when you're up here, instead of taking only 30 or 40 trades, some people take like the whole margin, 100 trades. Now, that is what we call gambling, because if you take 100 trades, yes, if the market goes down, chances are you might take profit in all of them. But if the market changes somewhere halfway and starts going up, then you're in trouble because they start going against you. You start incurring very heavy losses because they're supposed to be sells, but the market is going up. Right? So let's see. Okay. So again, if that would have been the case, that is what we would do. I would have broken it into 3 and taken, see, like that's what I did, I think, from here. I took the trades from there. All right. Okay. All the way. So again, even if you were doing that strategy, your first setup would have ended. Here's where your first setup would have ended. Right there. Okay. Then the second setup should have ended somewhere there. Oops, sorry. Okay. Second setup would have ended somewhere there. Okay, and then the third one all the way down. So this would have been a very good scalping day, In fact, often by the time you finish that and finish second setup, and by the time you do the third one, you'd have been good to go because you'd have conquered at least more than your 1%, way and above, right? Okay. Why? Because, see, as it goes up, the opportunities to sell, they come. And then as it goes up, the opportunity to sell comes. As it goes up, the opportunity to sell comes. And each time that opportunity comes, you now enter the trades. You enter about a third of your margin. Okay. Once you're done here, then you enter some more, and so on and so on and so on. Okay. That was the second point. There's still one more point that we need to look at. Okay. And that is okay. So the third point, which comes out as a consequence of the second point, is then adjust to the markets. So once you've evaluated your trades, you've looked at your trades, okay, the good ones, okay, and you've looked at your trades, the bad ones, and you've seen what happened, then you go back to the market and adjust. In other words, the following day when you're going to trade, or later on when the same setup provides itself or the opportunity comes again, then you adjust. You adjust what you did. If before you are taking all the trades before they turn and start going down, then you adjust. You say, okay, what if I wait until it actually turns? Then in that case, you know what you have to do. You have to be very careful about your turnings. How sure are you that the market has completed its turn? Okay. So those are some of the questions you start asking yourself. So each adjustment you make might come with a set of questions that you might have to look for answers. All right. So what are we doing? Well, this is what we call the trading mechanics. You are managing your trade. Taking the trade is not just clicking buy and clicking sell. When you are learning the first few days, yes, that's what it was, that's what it meant. But now that you're trying to become consistent, you want to become like a robot or like a machine that has been programmed, then what you need to have is you might need to have a system in place. And so this, what we're sharing, is what we call a system that allows you to become consistent if you do it daily. And what's the system? Well, you enter the markets about the same time daily. You use about the same strategy daily. Preferably, use the same currency you're using daily, or at least for that setup. Those are the consistent habits you must have in your system. Then the next thing is you mark your trades. You go back and you click on what I just shared with you on CTrader. It's called Deal Map. Deal Map allows you to look at your past trades and how they happened. Okay. So after you do that, you then adjust to the market. Okay. So I will let it open now for questions so that we don't go too far away. We don't lose anybody. Of course, there are other things that we would like to talk about, but these are some of the major ones, the main ones. Okay. There are other things that was brought to my attention. For example, we're used to trading when the market is trending, but what happens when the market is consolidating? How do we trade that? Okay, I think that was one of the questions. I'm hoping I can answer. Then there was another question that was brought to my attention. Okay. Anyway, right now we are open to questions as I look at the other question that was brought about. Okay. Any questions? Okay, looks like you guys don't have any questions today.
Thank you, Coach. This can just maybe a comment, and
Yes.
maybe you can help us out on this.
Mm-hmm.
So I think because most of us have been trading for a while,
Yes.
it is worth noting that sometimes you have done the analysis and you've marked the chart,
Mm-hmm.
and your initial analysis is actually right.
Yes.
And you take a first few trades, and your first setup, and they actually take profit.
Yes.
because now you've seen that that's the general direction, then you continue with your second setup, you take trades, but then suddenly things turn. Sometimes it happens. So I think it's good to note that sometimes you might have done the best analysis,
Yes,
but sometimes things just turn. So it's
absolutely.
also good to note when to stop when things
Yes,
are really getting out of hand, instead of rushing with your emotion and getting into deeper into the hole.
very good. Yep, yep.
Just a comment for me.
Yeah. Okay, I hope that is noted. It's okay to notice when you start when you're wrong. When you're wrong, it's not like you're a bad trader. No, that's just the nature of the market. The market keeps changing all the time. And sometimes when the market changes, it is okay to step out of the market. It's okay to decide, okay, the market has changed. Now I need to reorganize myself. You don't have to die with the market. You don't have to. If you are doing sells or buys, and then suddenly the market decides, okay, now it's going to change to another, you don't have to stick with it. You also pause for a while and then you also change. Okay. So if the market was on a buy, which is good, and then suddenly somewhere along the line, it decides that, okay, it's going to do now sales. Okay. Not sales, but changing the market. For you, yes, you are doing buys, and then suddenly you see a pattern here, and then you recognize it that this is a reversal pattern. Okay. Then you have no choice but to change your strategy. If it was buys, so now you start doing sells. But you will only see that if you pause. Okay. You pause what you're doing. You can't keep insisting. You even see the market has changed. It's now going downwards, and you keep insisting on doing the buy. So it's okay to change. Especially if the market changes from uptrend to a consolidation. Often it will do that, especially near the support and resistance, normally up there or down. When the market reaches there, it always inevitably changes or goes into consolidation, especially if it was coming up. Okay? So if it does not break that, you'll find that it will come and it will start doing something like that up there before it makes up its mind. Might go on for a while. Now, at this point, on a lower time frame, there's not much you can do. So don't even try to trade it there. On a lower time frame, we're talking about in the 1 minute, okay? Sometimes even 5 minutes, it becomes very tough to trade. All right. But if you look at the pip size from maybe there to the top, if it's more than 3 or 4, okay, 3 or even to 5, then sometimes you can enter, you can go with it, you can go up and down with it, as long as you don't take many trades. So while people are waiting for the market to break out, for you, you can enter like 5 trades, it goes up, 5 trades, it comes down, 5 trades, it goes up, 5 trades, goes down. So if you think about it, that's 5, that's 5, that's 5, that's 5. And each of these 5s maybe is 2 pips. Okay. So it'll be, you get 10 pips there, you get 10 over there, 10 over there, that's 30. 1, 2, 3, 4. While people are waiting for the market to break out, you'll have done your 40 pips just as people are waiting. Okay. But you have to be careful. You have to be careful and you know the range of that consolidation. But if you can't do that, it's okay to wait for the market to turn and then you start riding it again on a sale. So don't try and force it. You can't make it. Okay. Any other questions? All right. That means you're okay. That means people are doing fine. All right. I'll just share with you again what I consider the next steps. The account doubling, the $1,000 account doubling challenge is going on, but it's going very slow. I was hoping that by now we should have at least grown their 1,000 to almost 1,500. That's what I was hoping by now. Now, what would happen then is once we've grown it to 1,500, then from 1,500 to 2,000, it would actually have been a little easier or quicker. Why? Because now you have a bigger capital. You have 1.5 times what you had before here. Hence, getting to 2,000, this journey would be shorter than this one. But nevertheless, I am still waiting for you guys here. Because once we have done this, and you can look back and you can comfortably say you have doubled your account, then my friends, you are then ready to go live. You are ready to go live and start trading live. Why? Because you have proved to yourself that actually you can follow a system, that you can follow rules, that you can be consistently profitable. To be consistently profitable, it doesn't mean that every day you have wins. No, you still have losses, But now you've learned how to manage those losses when they come. When they come, you know what to do, you know how to go about it. Yes, you'll lose maybe even your capital, okay, but then you get back in, or your capital will come down, but you'll start growing it again. So my goal for you guys is to be able to double your account. It is a tough order because it requires a lot of patience, especially when you make like $20, $30 a day. That it's a discipline I'm teaching you guys. But once you're able to do that, I can tell you for free that then you are ready to start trading. So we have about 5 minutes. Is there any other question? So for those of you who are serious about trading and want to start trading live, okay, please join the challenge. And if you're able to bring your account at least to 1,500 and maybe 2,000, then you know you are ready. And even having the discipline from growing it from 1,000 to 1,500, to me, that is good enough. Good enough. But I didn't want to tell you that early because then some of you would get content and then it would jump into the live trading. Now, live trading, if you're going to get into the market with something small, I can tell you for free that that will be almost a waste of your time. Okay? It is very, very, very rare and very hard for you to draw. Well, forget about it 500. Let's start with $100 account. This is very hard to trade this. And I'm not saying because it's small money, no. I'm just being realistic. If you try with 100, you are more or less donating the money to the market. In fact, I dare say anything less than $500, no, is like donating money to the market. If you ask me, a target of higher than that is much better if you're going to go live. Why? Because then you have capital, you have liquidity, you have what it takes to make profit. How would it feel if you're trading and you're trading to get 90 cents in a day? Okay? Or getting $1 or $2 in one day. See, that is very, very small considering the amount of work you're putting in. Okay. But then again, that is me speaking. So once you know how to double up your account, you can try anything. So don't feel constrained. Don't feel like you must do it my way. My suggestion is if you must go live, anything from 50,000, better yet, 100,000 is the best way to go, because then you have capital. And as you trade each day, you can look forward to something good, because again, you'll have done it. We've done the $1,000 challenge, and you know how long it will take for you to double your account. So when guys do small trades with small money, I can tell you for free, they're just throwing that money to the market. Okay, I don't see any questions, and we can call it a night. So throw in if you have any particular topics you want us to look into. I'm supposed to repeat one class, last week's Thursday class, but if you have other specific concerns, just send me a message directly and I can try and work on getting a particular class to address your issue. Okay. Seeing no more questions, you can call it a good night, and happy trading.
Thank you, Coach.
All right.
Good night, Coach.
Good night. All right. Good night.